Hey, welcome to this particular week's Mastermind. Special guest, we have Chris Mercer. Chris has spoken a few times with us and for the RER Network and sharing amazing ideas, and has worked with the real estate profession, helping a lot of people navigate. And, you know, this whole navigation to be able to come out the other side with a different looking business, with a business that is fitter, healthier, and ready for a new set of market conditions. I know Chris has got some awesome views on that, along with being a chartered accountant to be able to help us analyse some of the opportunities and twists and turns that are available to us. So Chris, welcome. Chris was here. Yes, there you are.
I was muted.
Yeah. Oh, sorry about that. Yes.
Plenty of people will like that. Hi, everyone. Thank
you. Chris, great having you on board. There's a couple of things, guys, I'm going to share with you up front, and then we'll zoom into Chris, do a debrief at the end as to what we're doing, and any other questions you've got for Chris. By the way, by all means, as we're going through that, pop anything in chat you'd like to, so we can make sure that anything you'd like to have Chris either answer or clarify, we can actually go through that process and support. I have got a couple of slides to go through. Who would have thought? So let me just quickly bring those up for you. So in terms of this, there's a couple of things that I wanted to reinforce. We know, guys, it's the right strategy and the right mindset is going to actually give us the best outcome. Now, the only reason I'm actually reinforcing this conversation with you is I'm expecting you to be having this conversation multiple times with your team on a daily basis. So right strategies, right mindset. How's your strategies? How your mindset? What are you actually applying today? What's the quality of thinking you bring to this? Okay, that's going to achieve the best outcome. And I know we're focused on the 30-day plan, not the plan for the year, not the plan for the next 6 months. What's your next 30 days going to look like? The other thing, and I did this distinction today on Facebook Live, is feel versus do. And I'm going to bring this in next week into the agent and the property management mastermind. But particularly with the agent mastermind. See, with property management, most of them are still being driven by requests and demand from their clients, given some of the things that need to navigate through. But with a lot of your agents, they're needing to shift from a feel mode into a do mode. And what it means basically is, and here's the logical syntax an agent might say, I don't feel like making these calls, therefore I won't make these calls, okay? So I won't do the thing I need to do. So the challenge with this feel versus do, they've allowed their feeling to override the do. We've got to flip it around and know that when they get into motion, it will be the thing that will create the emotion. Because I don't feel like doing it, therefore I don't do it. But the double whammy, I'll just jump out of this for a minute. But the double whammy of this, guys, they end up overlaying a level of nasty neggy on top of it because they haven't done the thing that they know will help them achieve the outcome. You know, apply this to fitness. You know, no, I don't feel like going for a run, therefore I won't go for a run. So I don't do the thing that I know will actually help me achieve my fitness goals. But then not only I didn't do it, I then give myself a hard time. I feel lousy because I haven't actually honoured it. So we've got to help our team shift from I don't feel like doing it, therefore I won't, to thank you for sharing. That's normal. That's a human nature. Let's get into go mode and apply this and put this into action. So the more you can have the feel versus do conversation, I think the more value we'll actually get in the guys being in a healthy momentum. Carrying on from that, guys, the mastering the virtual meetings, I have been doing quite a bit of work with a few of you around this. So a listing presentation, vendor meetings, buyer and tenant virtual inspections and negotiations. It seems like a lot of people have been logging on to Zoom, but they don't necessarily know how to launch Zoom. Today I'm recording a video, this afternoon I'm recording a video that is how to actually utilize Zoom, how to bring up a PowerPoint in Zoom and so on. And that's going to go on to a private section on YouTube. So we can share that with the team as to going through that. It doesn't work, guys, that you're there with the client and say, hi, can you see me? I'm just seeing my name. Are you there? Yeah, yeah. Okay. and I'm hamming it up, but I'm seeing a lot of that at the start of a conversation where we want to be delivering intelligent perspective and so on to a client. And as simple as this technology is, if we're not utilizing it, know which buttons to press when, it'll look a bit on the dorky side. The other thing, guys, and we know there was a little bit of a scare, Aruchi, in the Victorian marketplace as far as Australia goes on the Thursday before Easter, where there was no inspections, so no private inspections. No one could walk through a property that was other than what was an empty property. So anything that had a tenant in it, anything that someone was living in, you couldn't inspect. That was overturned through some very, very, I think, effective lobbying and a reality with it. But I do think, guys, it's highlighting the fact that we need to be on the front foot with this. What I did do, and let me just bring this up very quickly. I've done a session on this, so you can access this if you want to. This is the format, I think, for a virtual showing. So if you haven't taken a pic of this or got a pic of this, can you just take a quick pic of this, guys? And just hand this over to your marketing guys. There is on the RER site a how to set up a template in PowerPoint webinar that I did a couple of weeks ago. So if your marketing guys need to do it, send them that link, have them watch it, and then have them put one of them together, stress test that with a couple of your agents, and then roll that out for all of them to be able to do it. One thing we did do with Simon, one of the videos from Marshall White, and thanks Andrew Hain for this, is we stripped the audio out of the video. So it meant I could show a video of a property and I could talk over the video and make it relevant for the buyer I'm interacting with. And as simple as that was, it really did, it was better than having music in the background and a standard kind of a thing. It allowed it to be more personalized along those lines. And the only other thing, guys, I want to highlight before I hand over to Chris is this is the sales 10-point commitment plan. I've done a couple of little tweaks on this one. And then there is a property management. So I modified this for property management as well in terms of the 10-point plan. My belief is right now, guys, that given what's happened in Victoria and an overturning of that decision, either media or someone from the government department is going to go and test, are we honouring the standards within the real estate profession? And I'd love us just to make sure that we're incredibly squeaky clean. And I'm doing some work with some other sort of influencers within the real estate profession, because I just think if we don't do this well, it would be very easy for that decision that was overturned to be re-overturned and say, no, there's going to be no inspections of property because we're not actually honouring the standards. So that means really good pre-frame going into property. Hey, just to let you know, here's what it looks like. And those couple of checklists where you might have had that internally, I'd love it to make it more of an external thing. So I believe, guys, now the two big issues you need to cover off at a listing appointment is, number one, how are you going to look after the health and safety of me and my family? Point one, right? What's that safety bit? Which has never been in a listing appointment before, never ever. Security might have been, but safety's never been. So this is health and safety now. And the other one that I think is going to be in there is how are we going to engage buyers and make sure that you can still achieve a great result with selling my property? Now, for the New Zealanders who are tuned in, it's still valid. How are we going to look after safety? Because you guys will, it looks like in the next 2 weeks, you're going to be from level 4 to level 3. So you'll be in the situation Australia's in now. And therefore it's, health and safety is going to be a biggie. And also how are you engaging buyers and qualifying buyers in the process, which is why those two shopping lists from a sales and a property management point of view are super important. And then, guys, the final thing just around this, and I know your heads of property management will be across this. There is massive information on fair trading in terms of New South Wales. There's here's the termination of tenancy during the COVID-19. In Victoria, the Consumer Affairs has got this. In Western Australia, there is this particular perspective that hopefully you're across. This is in terms of South Australia, and this is actually what's happening in Queensland. And I think in New Zealand, this is what renters and homeowners are seeing. So I just think, the good news is that your team only needs to be up to date with one of those sets of standards. It's quite amazing when you start to look at it across the board, how the nuances between the different states. But importantly, I think it's imperative that our team are up to date and have that access to great information and be tested on it. If the first time they're getting tested when they've got a tenant or a landlord in a conversation, so I've just checked this out on the site. Oh, really? What site is it? I don't think we're adding anywhere near the value that we potentially could in that process. Okay, phew. That's the little bit I wanted to sort of get across and download from a perspective point of view. You guys all good with this? Kerry, I was speaking to our local state member and he said the ministers are on edge and will close industries in a heartbeat if the agents don't conform. Absolutely. So we have an obligation to get this out to as many as possible. I've worked with some to say, can we have a leader sign off on a document to say, yes, our business is actually complying with this in this particular way. All right, so all good, take a deep breath in. Strategy, mindset achieves the best outcome, and someone who's got a great mindset that has, Chris, maybe you've seen one or two of these twists and turns, maybe not at the size of this, but certainly you've weathered quite a few storms in your consulting and helping people navigate through. It's great to actually have you on here today to share some of your insights and perspective from your point of view with our network members. So thanks for tuning in.
Yep, my pleasure.
Yeah. Chris, do you want to just maybe start by giving a little bit of what's the state of the nation that you see? And I know the New Zealanders, this is going to be quite an Aussie perspective, but it's still going to be fantastic and relevant for you guys too.
Okay, well, as a New Zealander, sitting here in Sydney, I think what's, the broad situation at the moment is there's been a huge exogenous shock in economics. It's what it's called. Both supply and demand has been affected. Doesn't happen very often. And people's natural reaction is to overreact. And, at the start, it's like run for the toilet paper. And we saw that action. No one talked about that, but people followed the herd, and all of a sudden, it took me 4 weeks to get a roll of toilet paper. And I think what's going to happen now is the dust is settling. Different people start coming up with different sort of variations. Everyone's opinion is their opinion. But if I just go through the 3 or 4 steps that I see, GFCs come through, Asian crisis, those types of things, but I just sort of look at what everyone sort of would do in broad baskets to me, is first of all, you focus on your own business. You might be thinking about your customers and your clients, but at the heart of it, you focus on your own business. And that is survival. First thing, how do I survive? What are the things I need to do? What's available to me? So you've all gone through and made what I'd call essential changes, taking advantage of whatever benefits come your way in your local region. And that's only natural. You're sort of looking at, is my income going to hold up? What's the likelihood of sales? But I think for most of you, New Zealand, not quite sure as far as every sort of province in New Zealand, but you've got to remember, we all came into the sort of COVID virus month having a tailwind. Most people were sort of looking at record listing month for even March. So people's confidence was pretty high. So the exchanges were there, settlements to flow. So none of us really felt that impact yet, but we all think there's a cliff coming in May for the listings. And some of you may feel that that's not the case, but obviously you've got to find a way to put deals together in the market as the market sits. After you've done the survival, you then get into protection of cash flow. The key thing about cash flow protection now is you want to treat it as cash is king. Everything's about cash, access to cash. What can you do to protect cash? Once you've lost cash, you don't have a lot of options. So cash protection is your number one focus right now. Forget what you're doing as a job. So you want to go take advantage of every single bit of stimulus which frees up cash flow. Staff changes, protection.
Chris, that includes mortgages being delayed and so on. And, you know, I've had a few conversations with leaders and they said, look, I'm pretty good for the next couple of months. And I said, look, I know, that's the point. Like, it's act on that now. So we are in a stronger position, you know, when we come out of this, as opposed to we come out of this and like, well, okay, who's going to loan us some cash in that mode?
I've got some people. Yeah, you all like to manage your cash flow personally. You know, you want to see that. Go down to the pub and watch how people do several rounds together. You'll find out who likes to be cautious, who counts their turn. You're all different, right? So if I spoke to each and every one of you, manage your cash flow differently. Some are carefree, and the other people are very, very astute and very, very clear about what their lines are. Even if you defer the money to the bank, put it into a bank account so you've paid the payment, but you've kept the cash flow. You don't need to feel like you just leave it in general funds, but don't give it to the bank, for God's sake. Those guys love taking your money. They're not going to say no, but take the opportunity and stockpile those capital payments into a separate bank account. So when it does come up, you can, God bless you, if you're in a position to do it, dump it straight back on the mortgage in 6 months, but don't lose the right to access your own money. This is a real crisis of cash. None of us really know what the winter will bring for Australia and New Zealand. We can feel quite self-satisfied, but we're all intelligent enough people to go, these things can get away, and it's quite quickly. So protect your cash. So I agree with that, Michael. It's not just the only thing. It's just like take advantage of every means and every bit of access you can get your hands on. But you need to be, legally, yeah, well, true. But the other thing is you need to be mindful of what you can repay. The piper is going to ask to be paid, and you must be able to pay back what you take, because otherwise, kicking the can down the road, it's not going to be much fun. You're praying for a bounce, and of course, would you believe it? So be mindful of what you're able to afford to defer. The banks aren't just giving these loans away. That's not the case. They're looking at what your ATO commitments are. They're looking at what your ability to make and profit historically is, and that you can pay back a loan in 3 years. So it's just not 250,000 for those that are looking at those funds. People that don't require those types of stimulus opportunities, well then look obviously at what your line of credit is, and right now buckle down the hatches. Mind you, I don't know about you, but it's fairly hard to spend money at the moment when you're just sitting at home watching Netflix. I mean, you know, it's that sort of lifestyle. So maybe a simpler life has come into chew. But this protection of business cash flow is quite important. Secondly, we're in a people business. We don't earn a lot of money in real estate from sort of, let's call it flow. We are services based. We perform services, we get paid. So you still need to have those people in the key roles which produce income. What you're looking for is to reduce the transactional staff as hard as you can and only have them on call. But your front of line staff, you want them sitting there on a success base, performing the tasks that are critically important. The other thing is right now you might be experiencing a spike in work. There's a lot of tenant relief requirements, the landlords, you're at the front line. So you're actually working harder than ever and you're not getting paid. I'm going to say it based on my own thing, which I do these sessions as promotional, you can call it what you like. I'm doing this to the market saying, I'm here to help people in difficult times. I'm not here looking to be paid. But there's another part to it, which is if you are doing exceptional work, you might have to look at your agency agreements and find out what this is, because some of you might be doing a lot of extra work, which could be almost called above and beyond what your normal management fee is. And you may be in a position to charge at least $20 to do something. Just at $20 for 100 or 300 clients, that might matter to you, because your staff right now are dealing with, you know, some of you I know have got 1,000, 2,000 properties under management. There's a lot of extra work, and that work's got to be paid for. So I just leave that to you to look at ways which doesn't seem excessive or profiteering, but it's most importantly, is this over and above? I'll let you read your employment, your agency agreements for that.
And Chris, I think this is a really good point. If it's an opportunistic kind of thing, it won't be viewed positively. But if it is, oh, that makes sense, or that's logical, then I think absolutely it's worthwhile exploring.
You're not a charity. You're a for-profit business, and this is a for-profit service. I know plenty of people who've got lots of money who like to go to the bank manager to get their budget done because it's free. So I think a lot of your landlords will see you as being the person to come to for free advice. They're not ringing their accountants. Be careful of that, because you're not legally entitled to give financial advice on certain things. It's you know, you're drawing a sort of a very thin line there of are you giving advice, as you've read in the papers. Now, the other part is sales. It's this protection of business cash flow and sales. Well, you need to be able to talk to your staff. Obviously, structures. New Zealand's got mostly a contractor model, but in Australia, you've got people on debit credit wages. You've all got people on commission only. Look, it's a market which is the market's fluid at the moment. So just keep in mind that Fair Work Australia Act. If you go look at what they're saying, they're changing the modern award. It's you know, it's you've got to keep looking at ways in which you can engage your staff. But the staff in sales, essentially, if they're not a sales agent, they're transactional. You need to look at that and tie that together. But the transactional staff, I think what Michael said before, they need to be looking at ways of doing business in the market today. If you've got a willing seller and a willing buyer, don't look at tomorrow. Make sure you're looking at what can do the deal today. You do need to find ways of transacting. You know, if there's a will, there's a way. And if someone needs to sell and you can find a buyer, don't wait till this finishes to start selling houses. Scrap, kick, scrape, do what you need to do to put deals together. And that energy comes from you. This is when the leadership premium in a business will separate quite a lot of businesses. People that don't drive their team will not make a sale. If there's ever been a time for good sales management, it's right now. Your staff will look for ways to not have to have a hard conversation because they don't need to. But when you provide people and keep their engagement high and make sure that they're focused on saying, listen, guys, you need cash flow. This is the way we make cash. You've got a willing lister, you've got a willing buyer. What can we do? Now, the price is not our job. And I think if ever, one of my biggest mantras, Michael and everyone, through every ups and downs, GFC, the sort of post-Olympics boom, everyone loves taking credit for when the price of property is going up in value. Yeah. Well, for God's sake, stop taking credit for it going up and stop worrying about it going down. Your job is to put a buyer and a seller together at the price it will sell for today. Stop connecting price to your ego. It is not your job. You must sell at today's price. Sorry. Now, one of my favorite long-term clients who retired now, was on the Sunshine Coast in 2008. And I said to him, mate, how's it going? He goes, we've had no open for inspections come through. No one, not one person went through an open for inspection in 2008 during the post-GFC. And Sunshine Coast got hit hard. I said, well, what's the story? He goes, I sold this property to someone, the guy, the lister, who came back to me, for $650,000 18 months ago. I can't get an offer on it at $450,000 today.
Yeah.
And he goes, I said to him, what, well, how about yield? Didn't the rentals hold up? He goes, it still only gets $19,000. I said to him, who paid $650,000 for a $19,000 yield property? People who buy at a high price also make mistakes.
Yeah.
So for me, Michael, I can see you want to say something, but I'm highlighting, we've got to get away from price and get to where's the deal done. Yeah.
Yeah. Yeah, and Chris, a couple of points on this. The first one is, and I talked about this last week, guys, and I'm sure it's going to come up quite a few times, but if you can support this in your conversations, what I've heard in some of my agent conversations is that we as an agency have been known to getting the highest price possible. So there's been a little bit too much price protection, and that might be okay for your marketplace because it might be holding up brilliantly well. But the challenge is, if an agent overlays their price view on the property as opposed to, no, take the agent's price view out, we've got a buyer, we've got a seller, let's actually put this together. And quite often, I think in this marketplace, for a seller, we've always assumed price has been their high priority versus getting their property sold. Whereas what I think, Chris, is going to happen is we're going to see getting my property sold fast is going to be a higher value proposition for me and for you as an agency than it's actually getting me the highest price in this set of circumstances. Yeah. And by the way, and you guys know I love the dialogue, we don't have a crystal ball, but this potentially puts you in the best possible position to actually purchase a property in 3 months' time.
Yeah.
So, you know, buying up, buying down, you could be in a really, really strong position based on this. Whereas if they're focused just on the transaction rather than the move, they might be in a better position, even though they potentially, inverted commas, lost money. And the challenge, I think, that both in Australia and New Zealand, the assumption that an owner makes is my property is definitely going to go up in price. So, you know, the view is I'm always going to make a profit out of a real estate transaction. One of the things, guys, that I say is if out of 5 real estate transactions, you make money on either 3 or 4 of them, you're doing super, super well. So that's a good piece of dialogue to get into your team, because they need to be letting you know, hey, this might be the 1 in 5 that you don't make money on. Let's actually get you into something else that is going to actually suit what you're looking for. So Chris, this is great. So one is survival. Have a look at those efficiencies and operational efficiencies. Yeah. Cash is king. What are you doing from a protection point of view? Protection. We're in a people business, so that leadership premium coming in. Sales is the way that we're going to provide more cash to our team. So how can we actually help them be on the pointy end of literally putting deals together? Yep. I love that, Chris, because there are actually there are less buyers in the market, so we can provide a better level of service to those buyers. And that needs to be the view that we're reinforcing with the team. Yeah. And I also love the fact is, watch out for praying for a bounce, as opposed to, there will be less agents in the market. So therefore, even with less volume, there'll be, I believe, we'll actually see our clients do well. But my goal now, guys, is to make sure that you're going for market share, and almost, you know, market volume, is secondary. We want market share right now so we can actually lift that volume back up. Great.
Okay, so after protection of business cash flow and then generating cash flow, the thing I'm pushing forward now, while we've sort of got a pause if your volumes are off or something, is the future preparation of the business for post-COVID-19, which whatever that means. So, in my opinion, there's a line in the sand. This is not just a line in the sand for business, it's also for society. Something's changed. I mean, I'm still watching World War II documentaries religiously every week, and I don't think they even shut the pubs in the middle of bombs dropping on London. So it's a remarkable thing the entire world's shut. It's quite remarkable. It's in London today in the Telegraph, they said it's the biggest economic shock in the last 300 years. Got to love that New Zealand and Australia weren't even possibly countries 300 years ago. So record keeping says this is a big deal. And I'm going to challenge everyone that this has brought forward the shift that was already underway of customers more readily accepting digital, a digital experience, while the critical steps of a deal can still be done in the real world environment for the majority of the transactions. So the companies right now who've heard about offshoring, outsourcing, front of office staff, back of office staff, this is going to speed up that curve. And I know some of you are looking to provide what we call agent services or PM services from central hubs. But equally, the customer's willingness to still do it. I don't know how many of you remember that, going to the bank, you like to go see the teller, you like to just see them, you can like to do your check over the teller because that's how you like to do it. Well, this is exactly that sort of moment. It's the detellerification of real estate, and potentially virtual auctions, virtual open for inspections. There's that fear that someone doesn't want to walk into a house that they don't know someone who's been in there, so they won't go. You now need to say, well, here's the COVID-free version, which is a virtual thing. And if that's changed, then that's what you need to provide. So I'm going to bring in my number one thing, which is what's the goal? So Michael just talked about market share. And I talk about what's the goal. And you guys have seen, a lot of you have seen me present before, and I don't come up with new ideas because I still think what I'm teaching is fundamental. And I talk about the goal. The goal of 2 grand final teams, as they say here in Australia, or finals in New Zealand, is to do what? Win the game. But in a grand final and a final knockout sudden death, generally there can only be one winner. So who wins? They both have the same goal. They want to be number one. They want to have the market share. They want to be the most profitable. But in the grand final, there's only one winner. So we say who wins? And it's the team that adopts their tactics correctly on the day. So you think of a fair weather team, likes to play under the sunshine with a hard track, and then just before the final, there's a downpour, hail, snow, 150 km/h winds. But all they want to do is play glamorous, throw the ball around, show what you can do type rugby. But the other team just keeps it tight and runs it down the blind side and kicks for touch all weekend. The team that plays the conditions best wins, not the best team. Now you've got to look at your teams and look at your market. You've all got dominant. Some of you might have a whale of an agency against you. Others might have nobody. It could be there's no leadership. Well, I'm down to tell you right now, forget about transacting your way to the future. Look at what you're going to come out. If this is a chrysalis moment for your marketplace, I would be buying up every week by any half-decent agent who can't run a business. I would be looking to say, mate, you want to hire a desk off me? And get out there and snap up the weakest business operators who have got listing and selling skills. And put your arm around and say, gee, it's a lot cheaper than 35 grand a month to open your own shop. How's 4 grand a month sound? And they almost start crying. Oh, thank you. This is a huge opportunity to become the absolute dominating agency in your market if you have the appetite for it. If you don't have the appetite for it, you need to shrink your business to be the adequate size for the business ambition you've got. You don't all need to be a whale. I'm not telling any of you to do that, but I want you to match your business aptitude to your cost base. Equally, those that see an opportunity, bring it through. But don't just aggregate people so you have 15 different cultures under one roof. You must bring a strategy and a type of business philosophy that's your point of difference, because ultimately it's your business. You run the business your way, not anyone else's way. And you've all got different opinions of how to do that.
And Chris, two points on that. The first one is when someone comes on, let's say you do bring someone in that mode, a lot of the time we're really soft on them for the first 3 months. Wrong strategy. We've got to be really tight and say, hey, here's how we run our business. By the way, I'm more likely to see things that are outside than you are. Can we make sure we're totally on the same page with this? They'll appreciate it and they'll want to be brought into a really focused way. Now, of course, if your business is loosey, then you can say, okay, come in and like, here's the freedom you've got to be able to do what you do. Yeah. The other point, and I had this conversation last week, interesting enough, Chris, and I was thinking it was a week or two too early to talk about opportunity, but I'm loving you bringing it in. So well done. There are a number of competitors in your market, guys, that you and all the team go, oh, they're a dork, they're an idiot, yeah, they're da. And that's pretty much competitor opinions. So just watch out overlaying too much competitive opinions on those competitors, as opposed to, hey, just checking in, how you going, how you traveling. We're looking at what life looks like after this health and safety issues and this economic issues. What are your plans? Love to have a chat with you about how we might team up or be part of the team, or love to see with some blue on your logo or some red on your logo or some yellow on your logo. How would that look in our colours? So just getting those conversations happening. Yeah, great, Chris.
Okay. So I'm sort of talking about the future. Now, you've always got to put your flavour, they always say seasoning is personal. So if you don't put salt and pepper on food after you eat it, even the chefs say everyone should season to taste. And that's the same with your business. But the mode is virtual digitization. So I'm going to say that I feel strongly that you should be looking at what I call a local workforce, critical staff, front of office. Customers need to see them. You need to be local. You need to look at a regionalized staff. And then you've got to look at the broader, offshore, onshore, doesn't matter. It's offsite. It's a company like mine runs that business. We centralize, we can run your business from anywhere in the country. And those services don't need to be housed. The idea of your shops and size of office, I don't know how many of you are thinking that restaurants right now are having a big thought about why they need to have tables and chairs in their shops right now, because they're all sitting there doing very little. I want you to reimagine your business and the infrastructure. And some of you have done this. I've done these for some of you before, but I call it people, systems, and profit. And you need to think of the profit pieces. What is the people that you need? What are the systems that you need? And therefore, are we utilizing them well to get profit? Because it's all well and good having software, and it's all well and good having people, but if they're not, the ingredients aren't mixed correctly, you don't get profit, you just got cost. It's just sitting there. So you need to have a look at how are we harmonizing those people, systems, and profit? And it's certainly something which we do at Live. And for any of you who are sitting there going, well, what should it be going forward? Well, for me, it's saying get back to basics, get into the technology environment, and then keep in mind, you've got your personal touch, seasoning, and salt for your business in your own personal environment. And some of you might be regional, some of you may be inner city, some of you may be in New Zealand, down on the coast, west coast of New Zealand. There's money to be made, there's transactions to be done, but don't forget your local flavour.
So Chris, a really important point that I think you're highlighting here. There's probably two kinds of real estate leaders out there at the moment, and that is, okay, well, look, what we'll do is we'll just put our plans on hold. We'll put our business model the way we've always done business on hold, and we're just going to actually wait 3 months, 6 months, whatever it's going to take, and we'll do that same business again. So they're playing like a when-then game. When the market goes back to normal, then everything's going to be okay. Yeah. What you're really saying is there's a window of opportunity here to reimagine the business and say, all right, there's probably been some things that we should have changed for a while. There are some things that if we put this under the stress test of the market conditions, how do we walk away with a fitter and healthier business that potentially is more market attractive to people in our team, who's more market attractive to our clients, so we can have the right systems and the right profit coming out of that particular model. So it's not a case of we'll just have the same business again. It's how do we reimagine? How do we do this differently? So I know, Simon, I can see you there. Looking at this, we've had with a number of different members conversations around having an innovations kind of a group. An innovations group right now is a really, really hot idea, guys, to be having a Zoom like this and say, how will we do this differently? What is the best way of doing it? And it's not just one idea. I'm happy to be involved. I'm sure, Chris, you get involved in these kind of discussions as well. How do you take this to another level? What does it look like differently? And how can we do something that is remarkable? The other little tip, guys, that is totally on this point, I'd love you to be releasing something to your team each month, or maybe every second week. Guys, here's something new we're doing. Here's a new initiative. And it could be something that you've found that the CY guys are doing in Perth. We can take and apply that in the Wellington market, or it's working in the Wellington market. We can put it into the Brisbane marketplace, or the Victorian marketplace, or the country New South Wales marketplace, and get momentum based on that. See, one of the basis of the network, guys, is if we can take an idea that's been proven in one marketplace, R&D it, and apply it in another marketplace, that's a huge gift from that point of view. So we can be doing a lot of cool innovation projects right now as a network to start to see how we can take advantage of this. Great point, Chris. Really strong point.
Okay, now we get to stimulus. I know that a lot of you probably thought you were going to be listening to stimulus and so on, but I think you're all probably pretty close to what you think you can and can't get, and maybe you just want to take a chance to talk. I don't want to say too much on it because I don't like talking about the bleeding obvious. But one of the things is to say to you, look, as live real estate accountants, we're here, we support the industry, we're tied into it. And so from a tailored point of view towards the types of issues that we've got for real estate, that's, maybe a question which has come up. So I haven't posted links. You're all going to get the CA as a chartered accountant. I'm going to give you the CA version document for JobKeeper and the summary from their magazine called Acuity, which will come out, which is the full coronavirus summary of stimulus packages for those that might not have been able to sort of fully understand. Keep it simple. There are federal government, state government, banks, and ATO relief. That's four buckets giving you some type of benefit. So just keep that nice and simple. And there's also individual preference for these and business. Now, the first ones that came out were individuals. The government paid unemployed people. It was probably focused primarily on the hospitality and airline industries. But that was $750 to people that lost their jobs. Get on the Centrelink quickly. They could be stood down, all that sort of stuff. But the big one for most of you is superannuation. The $10,000 drawdown available to their staff, to your staff, if they get reduced by 20%, that is made available, $10,000 up to June and another $10,000 in the next year. That's to allow for the staff to maybe help pay for their critical expenses. As the real estate industry found out, not to be rammed down their throat to tenants and be told that that's how they can pay their rent in full. This is to your employees, and if they've lost 20% of their income, they are entitled to draw down super for $10,000 twice. That is the individual benefits made available to them. Whether they want to do that or not is everyone's in a case-by-case situation. The second part is what's available to businesses. First parts are made by the federal government and therefore the ATO, is JobKeeper. Now, JobKeeper is for those eligible businesses, and that's a key word, for eligible employees, that they can and will be paid $1,500 a fortnight, where you've demonstrated that you've made a reduction in your turnover in a comparable period of up to 30% if you're a typical business. Now, obviously that's meant to keep people employing staff rather than sort of putting them on stand down. It's a very generous package for those that qualify. So for my end, that one I'm pretty sure you're all close to and you've looked at hard. The next,
Chris, do you have any more evidence that from a real estate business, whether it is on a cash basis or a exchange basis? Because
well, it's interesting. It's actually, I've got the answer to that. It's here. Let me just get it so I say the right word.
Good. We're all hanging for this one, Chris.
Yeah, I know. I just want to get to the correct slide. The basic test. The entity's projected GST turnover for the test period falls short of the entity's current GST turnover for the comparison period. So, if you are filing as an accrual business, that would still be deemed in most real estate agencies a cash settlement, not exchanged. So it would be what you're reporting for GST. Now, there's a more complicated test, which would say, and I'll say that again, I know some people that are reporting exchanges as their income, which means they pay tax on unearned income. So you'd have to take a step. But what I would say to you is the alternative test is a little bit more complicated. You've got to demonstrate to them how that the previous quarters aren't relevant to your current circumstances. So what's going to happen is that you're actually going to report your income from your GST, but it's only the period they're looking at is actually from July, from the 1st of April to the 30th of June. That is the period. They want to see it monthly, but they're not looking at what's happened up to the end of March. They're actually looking at what's happened 1 April forward. So most of you are going to have to predict that your income has come down. It will be GST related, but I think you've got to be ready to argue your case. The ATO is going to administer this through single touch payroll to pay people, but they are going to check on your eligibility. So at the start, you'll just do it, they'll self-assess. So be careful, have a good story. Explain to them that, hold on, I had these clients, I lost my contracts. These are the special circumstances of where you feel that you're down against budget. But Michael, the cash versus exchange, most people aren't reporting exchange sales. Neither would I encourage you to, especially if you're a projects guy, because you wouldn't want to be paying income tax on unpaid income if you had large sums. So it's your GST figure, which is what's been looked at. Okay, I'll keep moving.
So Chris,
yeah.
So Chris, just if I can just let me know if I heard you correctly. So a lot of the guys, you know, in terms of April, have had really strong settlements that'll continue on into
Yes.
May.
Yeah.
The concern that I think not only for our members but also for a lot of real estate companies is will JobKeeper come in too late to save some of the positions that we'd like to keep into in the mix. So
yeah,
so
it's not going to be done based on your GST. If the GST is going to be what it is.
So it'll be the demonstration that either month on month, because one of the other questions that
it's month on month. It's month on month. Yeah.
Month on month. One of the things that came through from Scott is what if your business, you know, a simple example, we had a project settle in April last year,
yeah.
right?
Yeah.
We didn't do well in April last year, so it actually looks like we're doing better, but we know that we're actually not. So do you think what you're saying is you've got to have your ducks in the row and be able to present a case to say, here's how it actually looks? Yeah.
Look, what's the turnover test? Here's the slide. I'll send it to you. Now, the Chartered Accountants Society can't say anything other than what is presented. So I will just say this clearly. This is not clear. It's a fluid situation. The government's reacting to any sort of complaint and they go, hold on. So just remember, but what's presented and passed through Parliament, sorry, New Zealanders, this is an Australian moment, is that the turnover test, a calendar month that ends after the 30th of March 2020 or before October 2020, a quarter that has started, so you can look at it either on a month or a quarter. The comparison period, as written here, the period in 2019 that corresponds to the turnover test period. Now, that's open to sort of what I would call quite a large amount of interpretation. I think it was written for hotels, pubs, and retailers, and they recognise that. So you need to come up with why last year is not comparable, and that would be I settled a large number of projects from 2 years ago. The story has to do, change the quarter, show the month. Okay?
Yeah.
So you've got to get the story right. There's no easy way to give you the answer you want to hear other than get the story right. Back it up with evidence, and they'll be reasonable. If you haven't dropped your income, you don't get it every month. You will get it for the months that you qualify. I know everyone wants to make a change, but I have got a very stern warning from the ATO here, which says to tax agents, and it says, this is the ATO's letter, and I'll send it to you, to tax agents. The ATO and TPB will take a firm and swift action should this be the case, where people change their business model to get a maximum benefit. So they're onto that, like changing your station from a dividend regime to a PAYG regime, to making your income look funny, but it's not really true. I'm just going to say, work as hard as you can to get the maximum benefit, but you need to go to your ATO tax agent and work with them. Don't self-assess without at least some off-the-record advice. Get a good story. I'm not your tax agent, but you need to get professional advice. the ATO and TPB aren't born yesterday, and it's the same for the IRD in New Zealand, that they will know when they think that things have just been shaken up to get a benefit. Okay, so here's a different question. It is a bit like, if you've been affected, you'll get it. If you're at 25% down, it sucks. You've got to be 31% down through. It's just got to work it, see how it goes. But you're playing with human rules, and therefore there's always winners and losers. Okay, but
yeah.
don't.
So, and Chris, the final point, and we'll move on because I know you've got some other things you want to go through. Is if you're reporting quarterly and 1 month is down,
yeah,
will you get it for the month, or do you need to show it for the quarter?
The ATO have said that they want to see monthly GST. So they've asked for that, even though it's quarterly reported. And they're going to be happy for you to change from monthly to quarterly reporting, just depending on how you want to get cash flow. So talk to your tax agent. They will have that information available, okay?
Okay.
There's a lot of flexibility here from the ATO to get you to get the benefits and quickly, should you need them, okay?
Yeah. Okay, cool. That's good to hear.
All right.
Guys, how can I just get a quick show of hands, guys? How are we going? You're finding this this useful? I'll just go to the screen. All good, guys? Yeah. Excellent. Chris, this is super valuable. We've got this for an hour, but we might go slightly over, Chris, depending on what else you want to actually cover off on. So
okay. Yeah, there's only look. I'm going to stop talking now and just throw myself to the court and see what questions come up. And just remember, I don't have unlimited insights into every possible future scenario. I've got a good business mind, but you know, this is a really fluid situation. And for New Zealand, it's quite a different situation. New Zealand's in a full lockdown. It's totally shut. So people are working in the background. It's almost like, how are you doing that? But being creative. So New Zealand, Australia, I have centralised on Australia here, but in New Zealand, it's all those things I said at the start, and you can talk about how to wrangle benefits once this lockdown, which I think is not too far away from being sort of allowing people to start walking out from the cave. Finally, it's just this payroll tax, the PAYG. I think most of you are looking forward to your PAYG. It's not crystal clear yet how that's paid. Do you get a refund? And this is the benefit that people are saying, did I pay there's a minimum $20,000 and a maximum of 100,000, but it's over 2 3-month periods, or 2 financial years technically. And what that means is, whatever you've done for March, and this is the funny one, they're going to multiply the PAYG you've withheld from your staff, and they're going to multiply that by 3. Don't ask me why. It's like unfair. So that's the calculation. That is then applied to your next payment. Now, if you're on a quarterly basis, that will not be applied until you file your June quarter. You get no benefit other than in the next quarter, you will have a credit for what you've paid. So keep that in mind. If you've paid monthly, then that will be applied to next month's, one of them will be applied to your next month's figure. That is what the case is. Now, there is a cash benefit to that because it is essentially giving you PAYG for free. For those of you that qualify for JobSeeker, it's almost 100% subsidy for certain people in your staff. That's the benefit there. There's going to be questions around that. Yet again, the single touch payroll portal is paying for all the lodgement at BAS for that one, and for JobKeeper, it's single touch portal, which the money must be passed on to staff.
So, Chris, just a quick question on that. If I was to hire 2 people in the month of May,
yeah.
Are you saying they would not qualify? And that would be an increase. It would be two additional hires would not qualify for a BAS PAYG relief.
No. Well, no. So, well, no, they don't go into the calculation for the people. They're multiplying your March payment by 3. So technically, yes, if your figure went up, you'll get to claim it probably in the next quarter. They haven't made that clear, but it's meant to be quarter by quarter. And that's why it's a little bit Mickey Mouse. I'll say to you again, go to the ATO, your tax agent, to get the current in practice. We're really only gearing up for this quarter's rebate, if you want to call it. And then the June one, they've got the dates that they'll apply those rebates for your next June quarter. You'll get a different assessment there.
Cool.
Michael. Now,
and Chris, just another question that's come through privately for me from Damien.
Yeah.
Out of interest, salespeople who are on debit credit, will there be some kind of applicability for JobKeeper with those guys?
Yes, absolutely.
Okay, good.
Yep. Been on full time with you, not a problem. If they're part-time, if they're only casual and they've been with you for less than 12 months, they don't qualify. But anyone who's permanent on the books, yep, they qualify.
Yeah, excellent, great.
Contractors, those of you who've got contractors, they have to file their own JobKeeper. They'll be entitled to their own JobKeeper should they qualify. Yep. So the contractors who are independent contractors, they've got their own direct JobKeeper relationship. You only have to look after your own employees. And then finally, I've got the state. You all know the banks. The banks are out there giving some deferments. Take advantage of what you can, and the business loan for $250,000. I would go for that, but remember, you've got to pay it back within 3 years. So look at things that you might be able to get capital improvement, technology benefits if you're building out any of those enterprise points of difference. But my final one is the payroll tax. For those that are paying it, that is generally wiped. And for certain states, there's a little bit of extra stimulus if you qualify, but they do seem to be geared towards hotels and gyms and those types. So not many people qualify in the real estate for that. Look, I think it's broad enough for me. I've said probably enough without just talking about how the stars come up at night. So Michael, I'll pass back to you.
Yeah, this has been awesome, Chris. Like, just your depth and wealth of knowledge has been seriously impressive, and helping us navigate is amazing. One question is, if people have been put on leave without pay for April, it would be better to put them back on the books for May, or continue on with leave without pay.
So you can't double dip. You can't, assuming they lost their job and they're not re-employed, they'll be on Job Seeker. The government said that if you apply for Job Seeker, but then your company re-employed you, that will immediately wipe the other out. So just, if they're going to stay with you, just put them onto JobKeeper. If they're stood down, and you're saying to re-employ them, just, the government said they will work that out. That's what I've heard. That's the best I can give you there. So if you've employed them, put them forward. I'd include them. If you haven't paid them, yeah, that might be an issue. But if you've re-employed them, and from the date, they qualify for that Job Seeker payment if you qualify. Yep.
Yeah, between 10 and 50 over the two 3-month BAS periods. Yep.
You're talking about the $1,500 payment?
Both. Sorry.
Yeah, for both.
Yeah, both.
Any PAYG, yes.
Yeah.
But yet again, I defer to your tax agent who files your BAS, because the ATO portal's sorting it all out. Yeah, fantastic, great. So guys, this has been awesome. Look, can I just get a show of hands? Do you want to do a quick sort of breakout group now? We normally do breakouts on these. How are you guys going time-wise? Would a breakout be useful just to have a discussion? Can I get a show of hands, guys, whether you want to do a breakout? I know we're at time. Yeah? Okay, cool. So we'll do a breakout. I'll put you in slightly larger breakout groups. So I respect the fact if some of you need to go, great. Chris, you and I might stay on. Let me just reduce the breakout. Yeah, okay. You'll be in 5 to 6. Remember, guys, you need to go into breakout. Can you just talk about what you've done, what you're learning, what you're going through, and from there. So those who want to be in a breakout, jump in and have a discussion about all of this. Chris and I will come back and we'll round up. Chris, you're okay time-wise? Yeah, I'm fine.
Yeah, okay, great. All right, remember you got to jump into the breakout, so join the breakouts and have a quick chat about what you've been through, anything else that you're doing within the business that's actually making a difference. Just jump in and join. Just click that link, guys, and away you go. Awesome. So Tina, you need to join the breakout. Stephen, breakout, and Melinda. the breakout.
Hello. I've got a new monitor. It doesn't have a camera.
Hey, Leanne.
Hi. I just thought I'd say hello. That was really good.
Yeah, fantastic, huh?
Really useful. Yeah.
Yeah, Melinda, you haven't joined your breakout yet, Melinda. Chris is in one of the breakouts, so he'll be having fun there, I'm sure.
Lots of questions, I'm sure.
Yeah.
Took about 3 pages of notes then. It's good. He said he's going to send us lots of resources, so I'll make sure I get those for you to distribute.
Yeah. Great hour.
And I think the timing was good with that one because
Absolutely.
It's a lot of them have got, headspace, and now this, really good.
Yeah. Oh, there's 2 Melinda Blakes. There you go. Hey, Stephen. Leanne, the morning, let me just put this. All right, I know we've gone over slightly from a timing point of view, but I think it was worthwhile you having a collective kind of a view. Chris, I'm loving how you put together, from a business point of view. So the first lot of stimulus was for individuals, understandably. And then from a business, we've got those 4 buckets to look at, which is federal government, the state government sort of opportunities, the ATO, delaying in payments or support being delivered through them, and also from a bank's point of view. And then, of course, we go outside that. One of the things that I've been relatively impressed about with a lot of the partners to real estate businesses is their willingness to provide some kind of option to support some of our great businesses to help navigate through this. And that might be a delay or a reduced subscription or something along those lines, which I think has been awesome to see those kind of things being put in place for the profession. So Chris, have you got any final thoughts? And by the way, guys, if you've got any questions for Chris, you just pop them in there. If you don't have a question, what I'd love you to do is switch over to what's been the most valuable thing we've covered off on in this particular Zoom session. And I'm going to take a pic of how good you guys look on Zoom. Make sure you've all got your cameras on. Leanne, Melinda, if you can actually have your camera on, I'll show you how good it looks. Looks amazing. I'll post it on the closed RER group. So awesome session, much appreciated, Chris. Need to bail. What's the goal? Fundamental and win the game. Yeah, great, Duncan. Awesome. So Chris, your business really does support a lot of businesses to help navigate through this. Can you just quickly, if the guys want to contact you, you're okay if we send out the link to your business for them to jump on and?
Yeah. Look, I even make sure it's my actual personal email for business owners. I'm happy for that to be sent to me directly. So yeah, my chris@liverealestateaccounts.com.au.
Chris
at live real estate. At
live real estate accounts.
Yep.
.com.
.au.
Okay, great. And those documents.
I'll send them to you, to Leanne or Kirsten, and put those two links. They're not brilliant to sort of print out and look at, but the JobKeeper ones are. But I'll make sure you've got those. Happy to send them to you.
Yeah.
Okay.
Great. So Kerry just said I like play to the conditions. I totally agree with that. So the team, I wrote it down before. So the team that plays to the conditions best wins. This is so critically important, Chris. Love it. Love the don't connect price to yourself. It's the market. Great. Yeah, brilliant. Thanks, Paul. So Chris, I really want to honour you and acknowledge the energy and effort you're putting into this and helping businesses navigate through. And thanks for your contribution. Hagan saying loves people, systems, profit. Melinda saying love these sessions, always feel empowered. That's absolutely the point. And I loved, Chris, and you spoke about this last year up at Principal Advance, where we could actually meet together in a room and have a conversation. In a room where you talked about the leadership premium, and I'm so glad that you brought that up again. It will be the businesses, and you guys as leaders have just got such an opportunity there to build momentum and move us forward. So can we just give you a virtual round of applause now, Chris? Is that okay?
Yeah, good.
Virtual round of applause. Hey.
Thank you very much.
I've
got one thing to
really
add.
Appreciate it.
I have got one thing to add.
Yeah, sure.
My little breakout group that we had, I hadn't said this when we spoke generally. You need to speak to your staff and make sure they understand that you're not getting paid $1,500 a fortnight by guarantee. That is quite important because they do think you're getting it, and you're going to go, I don't qualify. So you need to make sure that you're managing your staff's expectation, because if you do keep on the staff and not qualify, you've paid a full month out of your 100% cash flow, and you've had no benefit.
Yeah.
So you must talk to your staff about that, and month by month, it's a month by month thing. You don't always get it.
Yeah. So to get ahead of the game, to say, guys, we're looking at whether or not we can qualify for that. At this moment, it's unclear. Clearly, a gym qualifies easily. Clearly, a restaurant qualifies easily. But a real estate business, when we've actually had great sales in terms of last month, not sure if we're actually going to qualify. So that's a super effective point. Guys, just as we wrap this session, I think tomorrow we've got the public navigator session, and Chris, I'd love to have you on as a guest on that public navigator. That's our weekly navigator for the entire real estate profession. I'm doing a big push on the health and safety aspects for the entire profession tomorrow. And the reason I'm really focused on that is it won't be you guys, because you're running great businesses, who'll let us down. It'll be someone who decides to go rogue on a set of behaviours and run an open in some dodgy little suburb that they think they can get away with, and they'll shut it down for the entire industry. So we've got an obligation to help everyone be as squeaky clean as possible. And also Kylie Davis is going to be on tomorrow as well as a guest. So, hey Chris, awesome to have you on. Thank you so much.
Thank you.
Live Real Estate Accounts, it's just been a fantastic session. Much appreciated.
Right.
Stay safe, guys, and communicate with your team, communicate with your team. Thanks, guys.
Excellent.